The Direxion Daily S&P 500 Bear 1X Shares ETF, ticker symbol SPDN, is an exchange-traded fund (ETF) that aims to provide investment results that correspond to the inverse of the daily performance of the S&P 500 index. This ETF is designed for investors who want to profit from or hedge against potential declines in the broader U.S. stock market. The S&P 500 index is a market-capitalization-weighted index that tracks the performance of 500 large-cap U.S. companies across various sectors. It is considered a leading indicator of the overall health of the U.S. stock market and economy. The Direxion Daily S&P 500 Bear 1X Shares ETF seeks to achieve the opposite of the daily performance of the S&P 500 index, meaning that it aims to rise in value when the S&P 500 falls and fall in value when the S&P 500 rises. This ETF is a bearish, or inverse, ETF, which means that it uses various financial instruments, such as futures contracts, options, and swaps, to achieve its inverse exposure to the S&P 500 index. These financial instruments are typically leveraged, meaning that they allow the ETF to amplify the performance of the underlying index. In the case of the Direxion Daily S&P 500 Bear 1X Shares ETF, the ETF is designed to provide a daily inverse exposure of 1x, meaning that it aims to provide an investment result that is the opposite of the daily performance of the S&P 500 index. Investors should be aware that inverse ETFs, including the Direxion Daily S&P 500 Bear 1X Shares ETF, are not a perfect hedge against market declines. These ETFs can experience significant tracking errors, which can result in the ETF's performance deviating from its intended inverse exposure to the underlying index. In addition, inverse ETFs are typically more volatile than traditional ETFs, and they may carry additional risks, such as the risk of loss due to the use of leverage. Despite these risks, the Direxion Daily S&P 500 Bear 1X Shares ETF can be a useful tool for investors who want to hedge their portfolios against potential market declines or who have a bearish outlook on the U.S. stock market. However, it is important for investors to carefully consider their investment objectives and risk tolerance before adding this ETF or any other inverse ETF to their portfolio.